Hey yo, what's going on with the viewers of the tube? Tyler here of Chicocrypto, coming to you with a candid video to start this week on a rainy, cloudy day in California. We need that rain. But Bitcoin's not looking too good. We had a very early morning dump at about 2 a.m. Pacific Standard Time. Price went down and down hard, down to below 18.5K, although around 7 a.m. Pacific Standard Time, we had a nice bounce that brought Bitcoin back over 19K. And that's where we're sitting as of right now, just above 19K. But the title of this video is Bitcoin is ready to, is it gonna dump or is it going to pump? Well, this week is probably one of the biggest macroeconomic weeks in the history of this year. There's no doubt that it's going to be very volatile, and we're going to see possibly a big dump or a pump. So let's get right into that. We have the Fed's interest rate decision. Everyone should know that. Tuesday, the FOMC meeting starts. Wednesday is the decision. And then on Friday, Jerome Powell actually gives a speech on their decision and why, gives the details. Well, there are three scenarios that are possibly going to happen on Wednesday with the interest rate hike. So CPI data that came out last Tuesday, the markets were expecting between a 25 basis point to a 50 basis point raise. Well, after the CPI data came out, that's pretty much gone out the window. But there is still a possibility that it comes. So yeah, the number one, possibility is just a 50 BPS raise. And if that happens, the markets would pump because the markets have been expecting a higher raise after that CPI data. So the next scenario is the most likely scenario, and that is a 75 BPS raise. The Fed has done, I think, 2 of them so far. It might be 3, but the Fed has been pretty dead set on 75 BPS raises the last few meetings. We've done 2 the last 2. And the markets are now expecting a 75 BPS raise because of that CPI data. And Jerome Powell has basically said that they are going to do what's needed to get inflation under control. And that means higher interest rate raises. So that is the most likely scenario. But since last week, since that inflation data came out, the markets have been pricing in a 75 BPS raise. So in my opinion, if that happens, we may have even a little pump, but it'll probably come back down and then we're going to go pretty much sideways. Now, the final scenario is the feared 1 full percentage point 100 BPS raise. And if that does happen, the markets would dump. As the markets, they are pricing that in, but they're more pricing in a 75 point raise. 100 would be much higher than expected, and the markets should dump. So what do I personally think is going to happen? Well, I think a 50 BPS raise, there's about only a 5% chance of that happening now, especially after that inflation data. Definitely 50 BPS is the lowest probability of happening. The highest probability of happening is a 75 BPS raise, and I give that a 75% chance. But the second most likely is 100 BPS raise, the full percentage point, and I give that about a 20% chance of happening. But it's not only in the United States for this week. Just after the U.S. gives their interest rate decision, 2 major economies also give their decisions too. The Bank of Japan on Thursday announces their interest rates, as well as the Bank of England. So it could be more than just a single punch. It could be a 1, 2, 3 punch, especially if these large economies, get very aggressive. So what's my opinion on what is going to happen? Well, I have a feeling it is going to be a 75 BPS raise this meeting. And then the last two meetings of the year, which happened in November and December, they're probably going to do 50 BPS raises. If they do that, this would put the end of year interest rate range at about 4% to 4.25%. And it's actually getting where it was pre-2008 financial crisis. I think we got up to about 5% before, you know, we had the big recession and the Fed pivoted and dropped interest rates down to pretty much zero. So it's pretty much, in my opinion, guaranteed that a recession is coming. A lot of people are saying it may be a depression, but I have a feeling towards early next year, probably not at the first FOMC meeting in January, but after the first FOMC meeting, they may raise by another 25 to 50 after January, getting it up to, you know, 4.5 to 4.75. I have a feeling the Fed is going to pivot because, in my opinion, things are going to get pretty nasty all around inside the United States, and we will, you know, be entering that recessive environment, and the only thing they can do is pivot to save the economy. So, in my opinion, the Bitcoin bottom still isn't in. I mean, I made a prediction about the Bitcoin bottom few months ago, maybe 3.5 months ago, after I was like, okay, we're in the bear, there's no doubt about that, and I predicted when the Bitcoin bottom would come based off of previous cycles, and I've been saying for the longest time, September 23rd. That was what I made my decision, or my prediction on, and I still have a feeling September 23rd could be the bottom. Because if we do get 100 BPS raise, definitely I see Bitcoin going below our last low of 17.5K, 17K, and pushing down towards 15K, maybe even 14K. But I mean, I'm not going to say I'm going to be 100% correct. The bottom could be, you know, in early October, it could be in late October. I could be completely wrong and it could come early next year. But I do have a feeling the bottom isn't in because we haven't felt max pain yet. The hash rate is still extremely high. We haven't seen miner capitulation. We're seeing crap coins still pumping. I mean, shoot, LUNC, Luna Classic, and Terra Luna were pumping like crazy last week, which again, I was like, no fucking way. We're not in the bottom. I mean, that doesn't happen at the bottom, you guys. So, I mean, it's just crazy. Those coins, you know, are pretty much confirmed that they're total Ponzi schemes, yet people are still investing in them. The markets are still stupid. The markets need a reality check, and I have a feeling it is coming very soon. But let's talk a little bit about Ethereum. Ethereum's getting pretty crushed. I put in a small short on GMX, decentralized leverage. Never use centralized leverage. Use decentralized. And yeah, that short is doing pretty well. Probably not going to close it until what happens after Wednesday. But Ethereum, I knew was going to get crushed after the merge. A lot of miners have a lot of ETH and they got kicked to the curb. So yeah, they are dumping their Ethereum. And of course, you know, you had the fork, which added another element of selling pressure because people were trying to get that fork, even though the ETHW fork is pretty much crap, in my opinion. If you did get it, hopefully you sold it pretty soon. But regarding GMX, there was an exploit, you guys, and I got to talk about it. So there was an exploit, and it was, you know, on one hand, you know, the GMX's team's fault, but on the other hand, the GMX platform is working exactly as intended. So they have no price impact oracles, which kind of caused this exploit. An attacker manipulated the low liquidity Avalanche AVAX token on Binance, and they had a bunch of trades put in on GMX. So they were able to take a lot of liquidity from the GLP pools, I think over 565,000 or about there, because they were able to manipulate prices. Now, this is, of course, GMX should have thought about this, and, had the precautions put in so it didn't happen, but they didn't think, low liquidity would necessarily be a problem. There are other assets you can trade on GMX, Ethereum, and Bitcoin. There's no way this attack could happen because of the size of liquidity. The attacker couldn't move the markets on Binance. You would need billions of dollars to do that, but with AVAX they only needed millions and they pulled off the attack. GMX is, talked about the exploit they are going to fix, and GMX has a lot of good things coming, synthetic assets, which is going to allow a lot more assets, and I'm still extremely bullish on GMX, there's no doubt about it. But the final thing I want to talk about is Chainlink, because it is stinky. So Chainlink, something big is coming, there's no doubt about it. SmartCon is this week. The question is it going to be the initial release of CCIP, their cross-chain interoperability protocol, or is it going to be staking, or is it going to be both, the 1-2 punch? I'm leaning more towards CCIP and both. Because there is some information going around about synthetics teleporter from SNX, which uses Chainlink CCIP. So CCIP must be getting close to initial release, or synthetics wouldn't be dropping news about their teleporter. But again, Chainlink has talked about, they are going to launch staking this year. Well, they're running out of freaking time. We're getting close to Q4. So I would put a 50% chance of just CCIP at SmartCon and a 50% chance of both. And if it is both, stank, malank. Oh yeah, Chainlink is going to do so well come next year and next bull run. Well, cheers viewers, that is my video for today. I have a great video coming tomorrow on if Bitcoin is going to follow the same fate as gold. So tune in for that, and I'll see you next time. Cheers.